Well, good afternoon, everyone. Welcome to BDO's Salary Packaging Fundamentals webinar, part of our Working in Australia webinar series. My name's James Trainor and I'm a partner here at BDO. And I'll shortly introduce our other presenters, but before I do that, let me just apologise for those who dialed in earlier in the week to this webinar. We had some technical difficulties. Those have now been sorted, so we're all good to go today. So thank you very much for tuning in to this session. Now, before we get into the crux of today's webinar, I'd like to acknowledge that I'm hosting this webinar on the land of the Gadigal people of the Eora Nation, the traditional custodians of this land here in Sydney, and I pay my respects to elders, both past and present, and I acknowledge the traditional custodians of the various lands where you might be joining us from today, and I pay my respects to all Aboriginal and Torres Strait Islander people joining us online today. Housekeeping. So, questions? Well, we can't really take questions today because we don't have everyone online. This is just a recording, but we did have some questions come in as part of the registration. So we thank you very much for those questions, and we have picked them up as part of our session. There will be a copy of this webinar that will be sent around to those people who registered as well. So with me today is a stellar cast of absolute experts. Firstly, Stefanie Merlino, who's a partner in BDO's Melbourne office, specialising in employment taxes. And Stefanie has over 15 years of experience in all things employment taxes. And she is a regular presenter, both on these webinars as well as a sought-after presenter at other forums, because she's such a great communicator, clear and concise. So she will be wowing you with her knowledge around salary packaging. We're also really thrilled to be joined by Simon Ellis. Now, Simon's the National Manager of Paywise, and he began his career in employment taxes over 20 years ago, specialising in FBT and international expatriate taxes, and then picked up the salary packaging bug. And so he now works exclusively in salary packaging, and he assists employers from all Australian industries, whether it's not-for-profits, for-profits, rebatables, and all those terms will be explained as we go through the webinar. He helps all of those employers to implement and maintain effective salary packaging programs. He's currently the National Manager for Paywise Salary Packaging, an Australian salary packaging and novated lease provider. And he wants to make everyone aware of the benefits of salary packaging across Australia. And he has both in-depth technical as well as practical salary packaging experience. Simon and I had the pleasure of working together many years ago. If he wasn't here talking today about salary packaging, he would be on his boat somewhere wetting a line, hopefully catching something for dinner. So without further ado, let's get into it. What is salary packaging? Simon, any ideas?
Yes, it's the million-dollar question. It's a question that has a sort of a long form and a short form answer. And I will give you the short form answer now, which is just that salary packaging, quite simply, is the process of looking for opportunities to pay your employees their salary as a tax-free amount instead of as a taxed amount. You know, as James and Stefanie will know and can go into, there's a lot of sort of fringe benefits tax law behind it as to how it works, but fundamentally that's what we're doing. We are looking for opportunities within the law to use concessions and exemptions to deliver your employees their salary as a tax-free amount rather than as a taxable amount. So that's it in a nutshell.
Pretty straightforward. So who's using it?
Yeah, sure. All Australian employers can use salary packaging. Fundamentally, it's done in order to, as an employee benefit. It's part of an employee benefit platform, And the FBT concessions and exemptions, they apply to all employers, whether they're large or small. It's just a question of the employer deciding that it's something that they want to offer. Not all employers are equal, of course, when it comes to salary packaging. Some employers can do more or less, but all employers can at least do some things. Benefits like novated leasing, which is obviously one of the most popular salary packaging benefits. It's available to all Australian employees, provided their employer decides to make it available to them. So it's a decision made by the employer, and it's something they can either try to do themselves by running an in-house salary packaging program where they liaise with their own employees and arrange for deductions from their pay and tax-free payments, or they can use an outsourced provider like Paywise, which takes that administrative burden over for them and goes to the trouble of liaising with the employees, figuring out what it is that they can package, helping them to walk through the process of salary packaging, and then liaising with the employer payroll to arrange the deductions and the payments. So yeah, really, it's available to all Australian employers. It's just a question of, do you want to offer it? And if you do, how are you going to offer it? And who do you want to engage to offer it with?
Yeah. And so why would employers do it then, Simon? You said some do, some
as I said, it's primarily done as a part of the employee benefits platform. If I go back to the time when I worked with you, James, and I was talking to employers as an advisor rather than as a salary packaging professional, I would always answer that question by saying you do it in order to generate increased employee goodwill. You know, you as an employer, if you offer salary packaging, it doesn't make you any extra money. It can offer some benefits in terms of reduced payroll tax and things like that. However, its primary benefit is to your employees. They get to take home more money in their pocket because part of their salary becomes paid to them as a tax-free amount. And you know, whether it is through a charity that allows their employee to package up to close to $16,000 of salary a year as a tax-free amount using their mortgage, or whether it's a fully taxable employer who is offering novated leasing, the same thing happens. The employee's salary is, before it is taxed, is removed from the taxing process and paid to the employee's benefit, either into their bank account or perhaps into an account for their novated lease, where the money is then used to pay for their car. But yeah, the employer does it so that that employee takes home more money and receives greater benefit from their salary. They do it to demonstrate to their employees that they are committed to, you know, being an employer of choice and providing them with all of the benefits that are available to them out there in the Australian marketplace.
Yeah, and we see that a little bit with employers coming to us saying that, well, you know, they might bring on they might not offer salary packaging, and they bring on a new employee, and they're saying, hang on, my old employer or my current employer offers this type of arrangement. You don't, you know, this is going to actually cost me real money, because as you say, some of the benefits can be done in a really tax effective way. So we're certainly seeing a lot of employers choosing to offer salary packaging because to make them competitive in the market. I mean, it's obviously a very hot labour market, and it's one way that you can you know, help support your staff, actually deliver potentially a little bit more to them in terms of pay without actually increasing the cost for you. So you know, there's certainly an upside from the employer in that case.
That's a good point. It's another reason an employer would do it, is it creates that stickiness in terms of being an employee for that particular employer if they're offering these benefits and other employers aren't. And also vice versa, as you say, we have a lot of employers who contact us because somebody has come to them and they have a novated lease, and you know, they don't want to join unless they can bring the arrangement with them.
Yeah, yeah. But I guess there are some limitations. And Steph, what are the sort of things that employers would need to think about when putting a salary packaging a program in place?
Yeah, thank you, James, and thanks, Simon. So there are benefits, but the limitations, it really does require careful planning for both the employer and the employee. So I'm going to cover off on some limitations from the employee's perspective firstly, and then some things for the employer to think about. From the employee's perspective, so if they're entering into a salary packaging arrangement, they're basically going to be reducing their gross income, resulting in less take-home pay. So that means if they're sacrificing or salary sacrificing for an enduring benefit, such as a car fringe benefit, that's going to reduce their spending capacity for, it could be 3 or 5 years, depending on the lease term. In addition, if you've got an employee who wants to go and buy a house or get into some other kind of finance, the banks are going to be interested in the employee's net pay, so their pay after the salary sacrifice arrangement. So it has the potential to reduce an individual's borrowing capacity. From the employer's perspective, FBT is a regime that, well, the employer is responsible for bearing any resulting FBT cost. So if an employer is not aware of the obligations that must be met to enable that concessional FBT treatment, I know, Simon, you touched on the fact that a benefit would typically have with tax concessional to make it worthwhile. You need to know what those requirements are that enable those benefits to be concessional. Otherwise, it could end up being an FBT liability for the employer. In addition, there's certain salary restrictions that need to be considered. So if an employer has an employee on a certain visa, such as a 482, there are minimum salary levels that they need to meet, which are net of salary sacrifice arrangement. And for 2025, it's just a bit more than $73,000 is that threshold. And that's also the case for employees who may have an EA governing their employment. So these things need to be considered. Careful planning should take place to ensure that what should be a really good outcome for an employee and for an employer doesn't end up then triggering any FBT cost or potentially not being an effective salary sacrifice arrangement in the first place.
Yeah, excellent. I mean, there are lots of benefits. You just need to make sure you stay on the right path as you go through so that you don't fall foul of any of those, quirky rules that might make something that's going to be a great outcome for an employee, something that's not as good a story as what it could be. So we might move on to some little bit more about the employer. So Steph, you were just touching on some of the issues around employees and how it might impact them personally. What about employers? Can you give us a little bit more around the different types of employers and what the rules are for them?
Yeah, I think this slide sums it up really well. There are different statuses for the different types of employers out there, and the types of benefits that an employer will typically offer its employees will largely be driven by that FBT status. So if we look at that first box, you've got fully taxable. An employer who is fully taxable will be subject to FBT on all taxable fringe benefits. So this largely covers the corporate sector. For employers within this category, a salary packaging offering will typically include those benefits with concessional FBT treatment. And we'll cover off shortly what types of benefits qualify for that concessional treatment. But it means they'll be FBT exempt or qualify for certain reductions. The salary package of benefit that's not tax concessional will mean that the benefit's going to be subject to FBT. It's going to lead to increased cost for the employer and it won't be worthwhile. We then have the next two categories of employer. We've got rebatable and exempt, as you can see on the slide. Rebatable employers qualify for an FBT rebate of up to 47% of the gross FBT payable, up to a certain threshold. So that's $30,000 grossed up. Non-grossed up, it's up to around $15,900. So rebatable employers are income tax exempt employers who satisfy certain conditions that are set out in the FBT legislation. And this includes non-profit organisations, religious entities, charities, scientific or public educational institutions. So what we typically see for employees of a rebatable employer is they'll typically package living expenses such as mortgage or rent, utility payments, However, the employee will have to cover the resulting FBT, given the rebatable employer still has to pay FBT. So in that case, it's really worthwhile that the employee get their own advice to make sure it's going to be tax effective for them. It very much depends on the employee's tax rate. The more tax they pay, the more likely they will be better off if they salary package where they're working for a rebatable employer. And the other really important thing to note, we had some tax cuts that took effect from 1 July. So this will have altered the tax effectiveness of these arrangements for employees of a rebatable employer. And then we look at the bottom of the slide and we've got our exempt employers. And as you can see, this includes your public, not-for-profit hospitals and public ambulance services. And then we've got our registered PBIs and health promotion charities. So employers within this category are basically FBT exempt. So it gives them the ability to offer more competitive remuneration to employees, despite not having the same financial means as a corporate employer typically does. So anyone who pays tax, if they're working for an exempt employer in these categories, will be better off from salary packaging because they're basically getting tax-free benefit. And again, similar to what I mentioned for rebatable employers, the types of expenses that we typically see will be your mortgage, your rent, other living expenses that employees will typically salary package. So some really good benefits for employees who are working for an exempt employer, such as those listed on the slide.
Yep, and of course there are still those caps, aren't there, even for exempt employers. So it's not an unlimited amount of benefits that they can provide that's tax-free. So just need to make sure you're applying those caps appropriately.
That's right. And actually, I didn't cover off on the caps, so thank you, James, for calling that out. In addition to those caps, which are either $30,000 or $17,000 grossed up, depending on employer, there's also a cap on meal entertainment and entertainment facility leasing expenses. It's $5,000 grossed up. The reason I mention that, for those of you who have been around for a while, that cap used to be, there used to not be a cap at all, it was unlimited. So you'd see a lot of employees working for employers within that exempt category, claiming back their meal entertainment, their restaurant bills, and there was no limitation on what they could salary package. That has been drawn back, hence that $5,000 grossed up cap. That's on top of that 17 or 30K grossed up cap on other expenses.
Yeah, look, unfortunately, they took away the weddings. We used to see weddings get included in that, which was quite substantial costs, but that has been pared back a little bit.
Yeah.
Sorry, I lost you guys for a second there, but yes, I used to package, be involved in packaging back in those wild days of unlimited meal entertainment. And I just wanted to make the observation as well that just as Stefanie said before, if you're in that bottom row on that slide of the exempt employers, either a public health or a charity employer, salary packaging is, in my experience, an integral part of the remuneration program for most of those employers. It's incredibly widespread across exempt employers to the point where I'd say it's all, close to 100%. And if you are in that category and you don't have a salary packaging program, then you're operating at a disadvantage, given that most employers in those sectors use it. Because again, as Stefanie said, it's a way to make sure that employees in those sectors can take home more pay without you as an employer having to actually pay them a higher salary. The employers in the top row, however, rebatables and fully taxables, salary packaging uptake isn't as high. It's not as critical a part of the REM structure for those employers as it is for your charities. But that's not to say that there's not still salary packaging opportunities in that top row. Just that it's not it's not as integral as it is for the charities and public health employers.
Yeah, and I guess that's a feature of FBT. I mean, the government has made specific policy choices around certain behaviours that it wants. And electric vehicles is a classic example. And I know, Steph, you'll talk about that a little bit later on, but the government's certainly using FBT as a policy driver to achieve certain outcomes, to help charities in terms of their remuneration, and also to kind of drive other policy outcomes. So that's why we get some unusual outcomes, or at least it allows opportunities perhaps for salary packaging, which is beneficial for everyone. So getting it right, Simon, what are the sorts of things, if I'm a new employer and I haven't done salary packaging before, what are the sorts of things I need to be mindful of as I kind of go down the path of salary packaging?
Sure. The first thing to note as an employer in terms of salary packaging, and I should have probably said this previously, is that from an employer's perspective, salary packaging should be effectively free. It's not, there are salary packaging fees that are charged in relation to individual employees, but those fees are generally borne by the employee through an additional deduction from their salary. So salary packaging, certainly if you're using an outsourced provider like Paywise, from an employer's perspective, it should not cost you anything other than a little bit, I guess, of administrative time in terms of liaising with us to arrange the deductions. So salary packaging should be a zero cost, or in fact a slightly beneficial to you as an employer because of some of the reductions in payroll tax that you'll be able to achieve. In terms of what you should be looking for in your program, what does a good salary packaging program look like? I would say the number one requirement is that it has to be something that's visible, something that your employees are aware of. As I said earlier, the main reason you're doing it as an employer is to generate employee goodwill. It's part of your benefit platform. And so it's no good having a great salary packaging program that gives your employees an opportunity to take home more pay or save tax or whatever it happens to be if they're not aware of it. It's not generating any employee goodwill then. So number one is it needs to be visible, whether that means that it's up on your intranet, whether it is if you're using a provider like Paywise, you'd want to make sure that you are receiving regular salary packaging education and communication, that there were on-site events happening, not all the time, but at least occasionally, that your employees were being made aware that this program exists and of what they can achieve if they participate in it.
Yep. And that's a really good point, because not everyone needs to be an expert in the company. So, the HR team, the PNC, the finance team don't need to be experts in salary packaging. There are experts out there that you can lean on to actually deliver the message to your employees. Yeah,
and as what you're saying is right. In addition to being visible, it needs to be consumable, sort of palatable to them. They don't need to be experts. They need somebody to provide this information to them in a way that makes sense and that gives them all the information they need to make an informed choice, but doesn't bury them in, fringe benefits and tax legislation and the things that the three of us might like to talk about.
The good stuff.
I don't think most employees want to know about that. So in addition to being visible, obviously it also needs to be compliant. But I'll hand over to you guys as the experts.
The compliant with FBT rules, that's a really important one, because as we've said, I know my James's thumbs up, it keeps us in a job because the FBT regime is incredibly complex, and to enable a salary packaging arrangement to be just that, a salary packaging arrangement, and not leading to any unintended FBT consequences, the benefits that the employee is packaging for need to meet the relevant requirements within the FBT legislation. And every benefit type has a different provision and a different treatment and certain requirements that need to be met. So it's really important that an employer knows what the rules are they are giving enough information to the employee so that the employee can ensure that they're complying with all of those requirements. And that's where a really strong benefit policy program is really important. So having everything documented, making sure that it's available for the employee to see so that they are aware what benefits, in addition to being visible to the employees around the benefit offering, what are the requirements that they must meet such that those benefits maintain that concessional treatment. Because at the end of the day, the risk sits with the employer. If those benefits are not qualifying for the applicable concessional treatment, then FBT is going to arise, and it's the employer that pays for that FBT. So you don't want something that's going to lead to some really good benefits for the employee to then become a costly program for the employer. And then administration, I think that there's, Simon, you've touched on that, but can you talk a bit more on the administration around the program?
Yeah, absolutely. And I'd make the point as well that in terms of the compliance risk, using an outsourced provider does shoulder some of that, or help to defer some of that risk. We do some of the things like collect employee invoices, check them to make sure that they've sent through the right substantiation to support the claim that they're making and things like that. But I would say that an outsourced provider is not a complete compliance, program. As Stefanie said, the risk, if salary packaging is done incorrectly, does end up falling on the employer. It's if the employee shouldn't have claimed that benefit, or they don't submit the right supporting documentation, and it turns out that the benefit becomes taxable, it's the employer that is at risk. So all employers, even those using outsourced providers, should make sure that they are comfortable with the risk profile of the program that they're offering, which does sometimes mean making sure you cross a few T's and dot a few I's to make sure that, yeah, it is being administered in a way that you're comfortable with. In terms of,
that's fit with most things in terms of remuneration. You just have to make that upfront investment in making sure things are right. Much the same as if you're drafting an employment contract. You talk to your lawyers, you get it right, you get a good contract in place, and that's something you can use in a whole range of different circumstances. And I think the same applies for salary packaging as well. Sure, there's an effort upfront just to make sure it's being done right, the policy, the benefits suite, all of those sorts of things. But once you've got that there, then adhering to that, making sure that it remains relevant, but adhering to that, can put you in a good position. Again, notwithstanding that you might not be an expert across FBT, but you can manage it internally and mitigate the risk of falling foul of any of these rules.
Yep. And look, in terms of administration and administrative costs, salary packaging has come a little bit of a way in the last couple of decades. It's been around for a while now, and I would like to say that it's a bit easier than it used to be, and that's probably true even if you're trying to administer a program in-house. I think the way that the ATO looks at things and the way that it's done has been streamlined a little bit and has recognized some of the practicalities of it. But fundamentally, what you're talking about when we talk salary packaging administration is two things. On the one side, you've got the administration of the employees who want to use it and who are choosing particular benefits and asking, you as the employer or me as the administrator, am I eligible for this? What forms do I have to submit? What substantiation do I have to send in? And there's a discussion to be had there. In fact, a big part of it being successful is that education process, is not just having the employees understand what they can get out of it, but also being able to explain to them how to use it and what to do. So there is an administrative exercise there in terms of educating the employees and helping them through the process of filling out the forms they need to fill out and submitting the substantiation they need to submit. The second administrative challenge is on the payroll side, and that is, actually processing the deductions from people's salaries, whether it is somebody who's doing a novated lease or somebody who is doing a mortgage. Money needs to, or salary amounts that were going to be paid to the employee as assessable income need to be diverted as a tax-free amount or a partly taxed amount into either the employee's bank account or a novated lease account or something like that. So that side of the administration process is challenging and does need effort to be put into it and somebody to manage and administer it. And as I said, that can be an employer doing that internally, or if you're using an outsourced provider, they will do most of that stuff for you, both on the educating employees and holding their hands side, but also in terms of liaising with either your payroll team, or if you're a smaller employer that uses an outsourced payroll function, liaising with them to arrange the deductions from people's salaries and then the payments of those amounts into the right place. And I shouldn't laugh there, but I giggled a little bit because that's probably the area where it can go most wrong, is where you are not paying the money in the way that the employee expects it to be paid, either not the amount they're expecting or not paying it when they expect it. Making sure that the money is tracked from their salary through to the bank account or the novated leasing account where they want it is critical. Because again, if an employee feels that there is any part of the salary packaging that they don't understand or that isn't working properly, they will very quickly become unhappy, and it stops being an employee benefit and it starts becoming a negative thing.
Yep.
So yeah, those are the administrative challenges, and making sure that they are done right is critical to a packaging program that employees appreciate, and that one that actually generates goodwill.
Yeah. And critically down to that final point there about being relevant to those employees. So it's no good, if you're a fully taxable employee offering, salary packaging meal entertainment cards, because it just doesn't work. So, and also right around, your overall, workforce. If you've got, younger workforce who are perhaps looking to buy a home, they might want to just maximize cash, whereas in other circumstances that might be slightly different. So it's both what's good for the employer as well as what's good for the employee, but giving employees the choice. That's what this is all about, becoming an employer of choice, because they can choose if that's something that's good for them.
Yeah, and you want the service to be one that is quick, that is meaningful. You don't want employees who are, ringing contact centers and having to wait on the line for 30-40 minutes, or sending emails and not getting responses for weeks at a time, because again, that changes the nature of the program from one that generates goodwill to one that generates frustration. And again, really, if that's what it's doing, you might as well not have a packaging program.
Yeah, components to making sure you've got a successful program. One thing, Simon, you touched on was around documentation, and I think just to add from a salary sacrifice agreement perspective, that's one thing as an advisor I'm strongly encourage clients to do when they're looking at rolling out a program. It's looking at those agreements. So I'm just going to touch on what an effective salary sacrifice arrangement is, because it's where it's ineffective that it's then not going to be worthwhile. But to be effective, you need to have that agreement. And I know, so there is a possibility to have that agreement being verbal, but I strongly encourage clients to enter into a written agreement with their employees so there's no ambiguity. Otherwise, then things can go wrong where you don't have an agreement around what the terms of that arrangement are. In addition, something important, I don't know if you see this coming out with question marks from your clients, but to be effective, it needs to be in relation to wages that haven't yet accrued. And this is really relevant for those organisations who may pay on a monthly basis. So 2 weeks in advance, 2 weeks in arrears. If we use the example of someone who pays monthly on the 15th of each month, you would have to enter into that agreement in advance of the commencement of that month before the employee has started to accrue salary or wages to make sure it maintains its effectiveness. Otherwise, it's going to lead to unintended tax implications, and the individual's going to be taxed on those amounts rather than it being that salary sacrifice arrangement. So just a couple of really important things I wanted to comment on, hearing your point around documentation.
Yeah, and you're right. The process of signing up for salary packaging does always involve that first step of entering into the salary packaging agreement. And as you say, the tax-free payments can only happen from pay periods after the employee has signed that agreement. And so yeah, it's a critical part. And I think you'll find, depending on what provider you use or what process you use, there are a few different sort of sign up approaches out there. You referred to one of them, which I'm aware of, which some providers offer, which is over the phone sign up. I know that those providers have taken advice and been assured that it's effective and legal salary packaging sign up technique. But yeah, as you say, as an employer, you would probably want to see that advice and make your own decision about whether or not you're comfortable with that approach. And you are entitled as the employer to dictate how that works. If you don't, if you want your employee sign-up documents to have particular clauses in them or be structured in a particular way, you absolutely should be pushing for that and entitled to ask for that. And I can tell you most providers out there will accommodate employers and their individual requirements.
Yeah, that's a really good point, Simon. So, Steph, you touched on some of the compliance stuff. Maybe if we unpack that a little bit more detail, what can you tell us around the FBT requirements that are up on screen there?
Yeah, thank you, James. And so yes, as I mentioned before, the legislation contains an abundance of different concessions and exemptions, and depending on that profile, and we talked about the different employer profiles, depending on which category you sit in, will basically dictate what your salary packaging program will look like. So you really want to make sure that where you're rolling out a program, you're really aware of the relevant requirements and conditions that apply to enable to access the certain concessional treatments. There might be declaration requirements. There might be other conditions that an employee needs to meet. So it's about having that advice up front so that you're not then in for any surprises at the end. Reportable fringe benefit amount is an important one as well, because for typical FBT exempt benefits will not have a reporting obligation, but there are exceptions, and some of those are where you've got employees of an exempt or rebatable employer. Those benefits that an employee packages will typically attract reporting obligations. And then a big one, and I'm going to touch on this shortly as well when we talk about EVs. Those vehicles are exempt where they qualify for certain, whenever they meet certain requirements, but they're not excluded from a reporting perspective. So reportable fringe benefit amounts need to be taken into account, because employees, whilst they will not pay tax on an RFBA, they are taken into consideration where they have any government or means tested benefits. So could absolutely impact an individual. And then as we work down that slide, we've got some other things to take into account: superannuation guarantee, payroll tax and workers' compensation, depending on how an individual's employment contract is worded. If an employee enters into a salary sacrifice arrangement, they could be foregoing part of their superannuation entitlement in return for a benefit. So just to be aware of that. That's where an employee is, depending on their remuneration, if they're reducing their take home, so their gross pay and their ordinary time earnings, that could impact that superannuation contribution. So again, depends on how an employee's contract is worded. And then payroll tax and workers' comp. So the things to consider there, if you're reducing an employee, or if an employee is reducing their assessable income or their taxable income, It therefore leads to reduction in taxable wages for an employer for payroll tax purposes and rebatable remuneration for work cover purposes or workers' compensation purposes, leading to those reduced premiums. Having said that, the payroll tax and the work cover regimes do require fringe benefits to be included in those calculations. So there's also some interesting interactions there. But we've got those on the slide there because there will be implications depending on the types of benefits that are being salary packaged. GST is an interesting one. Now, I can't comment on that one. Simon, is that something you're happy to talk to?
Yeah, absolutely. GST is one of those things that it is part of, an integral part of the salary packaging value proposition. For a lot of these benefits that employees can package, not only are they getting their salary paid to them tax-free, in a lot of the cases, they can also use their employer's ability to claim GST back. You know, so for example, if somebody was packaging a $1,100 laptop, they would only need to contribute $1,000 of their own salary to pay for that laptop, and the $100 GST could effectively be claimed back from their employer. Use your employer's money effectively to pay it, and then the employer claims it back and is not out of pocket. So GST is an important part of the packaging program, both with ordinary benefits and novated leasing. In a nutshell, it means that at the end of each month, for BAS purposes, salary packaging is going to deliver the employer an opportunity to claim back GST on some of these benefits that the employees have spent their salary on. So there is a claims process at the end of each month to recover this GST, and in most cases to pass that benefit back to the employees, although some employers don't, some employers keep it. And there's also sometimes when you've got a novated leasing program, there can be a GST payable amount as well in relation to the post-tax amounts that people are paying towards their cars. Without getting down into the weeds there of the details, it does mean that there is a GST process to follow each month in relation to salary packaging. And again, with my industry hat on, my salary packaging industry hat on, I would say if you're using a provider, most of the things that Stefanie just went through are things that the provider should do for you. Things like providing a goods and a GST summary report at the end of each month, telling you here's the amount of GST that's gone through the program that you can claim, and here's the GST things you need to pay for, and here's them netted together, and here's what you need to put in your BAS for the month. Same with FBT. You should expect your provider to give you an FBT report at the end of the year that you can then use as an FBT work paper to load up or to give to James and Stefanie and make them look at it when they are preparing your FBT return. RFBA reports, reportable super reports, those are things that a provider should do for you so that you don't have to do them yourself. Payroll tax and workers' comp, less so. That's something you do in your payroll tax return. But again, having a provider there means that some of this heavy lifting is done for you. And I think the same is true for luxury car leasing, which is the last bullet point up there. Certain vehicles, or any vehicle that has if you're a tax-paying employer, so a full FBT employer, corporate or government, any novated vehicle that has a cost price greater than the car depreciation limit, which I think at the moment is about $69,000. Any vehicle that has a purchase price greater than that is considered a luxury car for the purposes of the luxury car leasing rules. It's very confusing. It's not a luxury car when you buy it, like the luxury car tax rules have a much higher threshold, but the luxury car leasing rules, they apply to these vehicles. And it means there needs to be an income tax adjustment at the end of each year for those cars. And again, I won't go into the details of it, but it's something that either your provider should help you with, or if they're not, or if you don't have a provider, it's something that somebody like Steph or James can help you with in terms of determining what the impact of those rules are and what the adjustment you need to make in your end of year tax return is. So yeah, those are two elements of salary packaging that do require a little bit of help, I think, for most employers.
Yeah, and it's really important to get those things right. And again, understanding what the obligations are for an employer at the time you set the program up, and then monitoring that as the program proceeds each year. I'll just touch on a couple other items there around superannuation. So that's where someone's salary sacrifices for some additional employer contributions into superannuation. Again, that can be quite favourable. It's turning amounts that would be taxed in the employee's hands into contributions to a super fund that will be taxed in the super fund and potentially only taxed at 15%. So potentially a good outcome for the employee. Employers do need to be aware that there is some reporting obligations. So much like what Steph mentioned for reportable fringe benefits, there are reportable super contributions that need to be reported at year end. And important distinction. So if an employee salary sacrifices for additional employer super contributions, when the employer is calculating the super guarantee obligations, that's the mandatory contributions that an employer must pay, it needs to add back those employee salary sacrifice amounts. So just something to be aware of there, that it does have an impact around super guarantee, and you just need to make sure that you've got processes in place to make sure you're calculating, an employer is calculating the right super guarantee amount.
I might just make a,
please.
Sorry, another quick point there. Something we see happen a lot is, as Stephanie mentioned before, when you salary sacrifice any income amount, it decreases your taxable income, your assessable income. And we often see employers who start doing salary packaging, because the employee's taxable income is reduced, the amount of income that the super guarantee is calculated on is also reduced. And sometimes purely by accident, just because it's the way the payroll system is set up, employers end up reducing the amount of super that they are paying on behalf of an employee because they've started salary packaging and their income has come down. But I think in most cases, employers don't intend to do that. Most employers would not say, oh, we're going to reduce the super we're putting into your account just because you've started salary packaging. Most employers like to keep the super at the same level. I mean, technically there is legally an opportunity to reduce the super you put in if somebody is packaging, but again, it's not. It goes a little bit against the whole concept of it being an employee benefit and something that generates goodwill to do that. And so most employers need to take steps to make sure their super is retained at the previous level.
Yeah, that's a really good point. Yeah, Simon, around the difference between fringe benefits and super sacrifice. The final point there around superannuation is just to be mindful that employees who have contributions that exceed their excess concessional cap, and that cap is $30,000, plus if an employee might be able to carry forward some unused cap from a prior year, but generally it's $30,000 per annum. If the contributions exceed that amount, then the employee will be subject to additional tax. So you start eroding the tax benefit from having superannuation sacrifice. So look, it's something employers should definitely make their employees aware of. There's no technical reason or legal reason why an employer would have to step in and stop an employee from salary packaging, but it's certainly something that erodes the benefit. And to your point, Simon, what you were just saying before, it could turn what is a good benefit into something that's a bad news story for the employees. So you just need to be careful in your communications out to your employees around that. So moving along to some common benefits that are being packaged up out there. Steph, you love EVs, the one parked in your driveway in particular, but tell us a little bit more about electric vehicles.
Yeah, this is a topic close to my heart. I'm doing my part for the environment, driving my EV. So the EV exemption, I mean, I'm sure many of you would have heard, it took effect 1 July 2022. So there are certain requirements, coming back to the theme that we've had today around the FBT rules. This exemption is no different. There are certain requirements that must be met to enable an EV to be considered an FBT exempt benefit, and therefore a significant benefit that we suspect employees will be salary packaging. And when we cover off on this in a bit more detail, I'm really keen to hear more from Simon on this note. But yes, it's the exemptions applicable at the moment to zero or low emissions vehicles. That definition is changing from 1 April next year, and I will explain that in a bit more detail shortly. So we won't spend too much time right now on EVs. For now, I think we'll move on to remote area housing, and I'll be speaking about EVs shortly. Simon,
okay.
do you want to cover up?
Sure. So employers who have employees who both live and work in remote areas, as defined by the ATO, can do particular salary packaging benefits, mostly around their housing costs. If you've got employees who rent in remote areas, then those employees can use their rent costs, or 50% of their rent costs, to receive an equivalent amount of their salary as a tax-free amount. So if they're paying, $500 a week rent, they can use that to get $250 of their salary each week paid to them as a tax-free amount. There are other remote area packaging opportunities for people who've bought houses in remote areas and or who are paying mortgage interest. There are some concessions as well for remote area fuel costs. But those benefits tend to be a little bit complicated in terms of how they work and who can benefit from them. If you're an employee of a charity, an exempt employer, a public hospital or a charity, you can use these benefits to effectively double the value of your tax-free cap each year. But otherwise, other than that, if you're a high-income earner, they can also be used to reduce your tax rate, although not to completely eliminate it. So you're not getting tax-free salary, then you're getting salary that's taxed at a reduced rate of about 30%. And if you're a high income earner, that can be very attractive. But again, in general terms, these are benefits available to employees out in regional and remote areas. Not all employees are necessarily going to be able to use them or going to benefit from them, but making them available as part of the employee's benefit platform is a good thing. It generates that goodwill. But they are complicated, and if you're going to offer them, it does help to use a partner who knows how they work.
Yeah, and I guess it was on a similar vein of things like relocation as well. I think, Simon, that they are quite complicated in terms of their application, but can be quite beneficial in terms of the types of things that can be provided tax-free, and particularly for employers who are looking for ways to bring staff from overseas into Australia or move people around Australia. And it's a really good measure to effectively manage some of those costs that might otherwise apply. And importantly, the employee has some choice around that. So, if they want to do certain things, then it can be done in an effective way. If so we see a lot of companies might offer up to a certain dollar value to help someone relocate, but the employee might have some additional costs. And so there are some opportunities to salary sacrifice those additional costs, even if the employer is willing to provide support up to a particular level.
The biggest salary package I ever saw was a relocation claim for stamp duty on a purchase of a house in Sydney. It was a $150,000 claim, which meant that employee got $150,000 of their salary paid to them tax-free over the next several years. So it can be really good if the employee is really good.
Absolutely. I've seen an aeroplane be relocated as well. So there are some pretty chunky things out there. On a smaller scale,
they relocate themselves?
That's it. You would think so. It's a bit of a trade-off. But on a smaller scale, portable electronic devices. Now, another exempt benefit that's really a good value benefit that can be provided. So that's something like a phone or a laptop or an iPad, something like that can be provided tax-free. And as Simon mentioned before, you can also recover the GST if the employer is willing to pass that along. So a really good benefit for to include as part of a salary package arrangement.
E-bikes are a bit trickier. They are a common benefit, becoming increasingly common, but in summary, they need to be provided through a sort of a mini novated lease arrangement. And the employee needs to only really use them to travel to and from work. I think the industry is currently lobbying to have this concession broadened a little bit, but they are out there. And for the employees who use them to travel to and from work, packaging an e-bike can be a really cheap way to buy one of those bikes, because again, you're paying for it with untaxed salary.
Yeah. Otherwise deductible benefits. Look, these are the sorts of benefits where if the employee paid for them themselves, they get a tax deduction in their own return. And so there's an alternative to actually have those reimbursed by the employer and not pay FBT. So in some respects, it's not a tax saving as such, because the employee isn't then able to claim the tax deduction in their return, but it is a way that they can accelerate the timing of that tax deduction. So rather than having to wait till you lodge your tax return, you do it as you go through. Just need to be careful because of the comment that Steph made before about risk and pushing risk back onto the employer when it's a fringe benefit. Again, it's one of those other benefits that's possible, but probably needs to be thought about and planned quite carefully. The other ones on there, we've probably touched on some of the stuff with novated car lease and remote area benefits, just in the interests of time. I mentioned superannuation being a pretty common benefit, and the final one up there is in-house fringe benefits. So that's where an employer, might provide certain, products or services to members of the public, and there are some concessions where staff are able to access those sorts of, products. And maybe at a discounted rate, so there's some concessions there. So we often see that as part of an arrangement that employers offer. So back onto some details around electric vehicles, because it's obviously a new type of benefit, and there's a lot of issues that employers and employees need to be wary of, Steph.
Yeah, that's right, James. So I think to begin with, zero or low emissions vehicle is what the FBT concession applies to. At the moment, it's quite, broad in terms of it includes your plug-in hybrid and other vehicles that are considered zero or low emissions vehicle, but that changes from next year. So there's plug-in hybrid vehicles, and they're the ones that you've got both a petrol car and an EV, so it uses both. Those vehicles will no longer be considered a zero or low emissions vehicle from 1 April next year, which means they will no longer be eligible for the FBT exemption. Any pre-existing commitments, so those arrangements that have been entered into before 1 April next year for those vehicles will still qualify. So, but you just need to make sure that it's considered a pre-existing and not a new commitment with certain changes to those arrangements.
Yeah, and I think there is a little bit of noise, isn't there, in Steph or Simon in Canberra, I think, around, certainly some wanting to extend that out and not have them switch off in next year, but that's the law is written as it is at the moment.
Yeah, I mean, watch this space, but at the moment, it is still slated to end on 31st of March next year, just for the plug-in hybrids, not for the electric vehicles. But as you say, yes, there's some moving and shaking behind the scenes to try and push, extend that, but we'll see.
Yeah.
Sorry, Steph.
That'll be interesting to see. To be honest, maybe I'm just more focused on the EVs as an EV driver myself. I don't see too many plug-in hybrids on the road. So I don't know what the uptake was for those, Simon. Can you comment on the uptake of plug-in hybrids, just out of curiosity?
Yeah, look, I mean, the reality is that I think electric vehicles and plug-in hybrids together probably make up about 15% of vehicle sales across Australia, but within our fleet as a salary package provider, they're over 50% because the concession is just so good. The main limiting factor for plug-in hybrids, as you're suggesting, is just that there's not that many of them out there. There's a few, and they seem to rate fairly. They're popular vehicles. I'm personally thinking of getting one of them, but we're sort of running out of time. Some of them are quite popular, and they have delivery times that are 4 to 6 months. And so by the time they arrive, will be the exemption might be over. So we don't, for that reason, we probably don't see as many PHEVs go through as we do EVs. EVs are very, very popular, and there's so many more of them coming onto the market. I mean, one of the limits for this concession is the car has to be less than the luxury car tax limit for an EV, which is about $93,000. And when this concession first came in, there weren't that many EVs that actually were under that. But now there are dozens, and each week there seems to be another few coming onto the market. So yeah, they still make up the EVs that make up the lion's share of what we see going through this benefit.
That is so interesting, Simon, 50%. And your point around the LCT is an interesting one too, because just the other day I saw, or actually I heard on the radio, a new make that's been introduced, a new EV to the market, and there was a specific point in the ad that it was below the LCT threshold. No doubt that's targeted in trying to encourage employees to look at packaging these benefits, because yeah, they are very tax effective. Noting there are some other things to consider, and I'll cover up on that in the end around reportables. Before I get there though, I think it's worth flagging that electricity is considered a car expense, and the relevance of that for a petrol novated lease, you would be packaging all of your fuel cost. Yep. From an EV. You're not going to have petrol. You're going to, the cost is electricity. So that the ATO clarified not long after the exemption was first passed that electricity is considered a car expense, and therefore your electricity costs associated with charging your vehicle are exempt. So you can package those components as well. Now there is a PCG that was issued by the ATO, PCG 2024-2, and that confirms that the EV home charging rate is 4.20 cents. That's relevant for those employees who are charging their vehicle at home, and they're then putting a claim in with their salary packaging provider to seek reimbursement of some of their electricity, because a standard electricity bill is not going to segregate between your electricity for charging that vehicle versus your electricity that you're using more broadly. Now, a few things that come out of that PCG are if you're an employee, if the employee is also using a commercial parking station to charge up their vehicle, and they haven't also got a charging system that enables them to determine the exact amount of electricity that's being used, you can either claim for your home cost electricity using the PCG or your commercial parking station method. So that's something to be aware of for those employees who are salary packaging an EV. And I'll also, actually another point that I want to raise about that PCG, that is not applicable for plug-in hybrid EVs. It is only available for EVs. I think a couple of other things, and I know this is not really FBT related, but as an employment tax advisor, I do want to raise it for anyone who's listening, because the relevance of that cents per kilometre is a lot of most, if not all, employers will pay employees a cents per kilometre allowance, and this is outside of the benefit arrangement. But if an employee is using their own vehicle and travelling for work purposes and in claiming back a cents per kilometre rate, that rate will be relevant for those employees that have an EV. And I suspect a lot of organisations haven't set up their systems to incorporate this cents per kilometre rate that's applicable for EV vehicles compared to petrol cars. It is something to be aware of there. And then another point I need to make, the in-home charger. I know when I got my EV, I then had to install an in-home charger so that I've got the capability to charge my EV at home. That in-car charger, it can cost a bit. It can cost $1,500, $2,000 to set that up. That does not form part of the salary package because it's not considered part of the exempt benefit or an exempt car expense. So it's a separate property fringe benefit which would attract FBT if the employee was to try to incorporate that into their salary package. So that's a really important one to be aware of as well.
That's right. I think not even the cable itself is claimable. And most people have to buy that charge cable themselves. So yeah, it's only the electricity.
Yeah, it's a significant upfront cost. I know when I got a quote for it, I was like, oh, it's a bit more than I expected, but hopefully the benefits of over the life of the lease will make it a worthwhile investment to set up that charger at home. And then reportable fringe benefits amount. So this is a really important one. I know when this exemption first took effect, a lot of organisations were not aware of the reporting obligations for these vehicles. So whilst they may be exempt from FBT, there is an obligation to report on the employee's income statement the reportable fringe benefit amount. So what that means, even though you're not paying FBT on the benefit, you still need to calculate the taxable value of that benefit so that you can then get your RFBA amount. And that then goes onto the employee's income statement, as I mentioned. If the vehicle is a shared car, there's that exclusion that's available for pooled or shared cars from reporting. That will still be applicable in these instances. So if you've got a shared EV, there's no reporting obligation in that circumstance.
I also would just make the point that a lot of employers forget about this because for normal novated leases, for petrol and diesel cars, they're generally not reportable because of the way they're administered. There's a post-tax amount collected that reduces the taxable value to nil, and so they aren't reportable. So it's easy to forget that the EVs are.
That's a really good point, Simon. Yeah, it is a little bit tricky. And again, back to that communication piece, employees just need to be aware of what's going to happen as far as that reporting goes, so that's not a surprise for them at year end. Well, we're almost there. So thanks everyone for sticking with us. But Simon, I'm an employer. I'm keen to introduce a salary packaging arrangement. What should I be doing?
Well, I mean, as the slide suggests, number one is figuring out what type of employer you are. In most cases, it's fairly obvious. I mean, if you're a corporate or government, you're unlikely to fit into those exempt or rebatable categories. But if you think you might be rebatable or exempt, it's worth sorting that out before you start your packaging program. And you wouldn't talk to a provider about that. That's a question you'd ask James or Stefanie to resolve. Once you know what kind of employer you are, then yeah, it's a case of looking at what are the options out there for you. What are the type of benefits you think your employees would be interested in, and how do I choose an administration method that works for me as an employer? Obviously, as an industry representative, I would always recommend you look at using an outsourced provider. I mean, I really do believe that. We take a lot of the heavy lifting off employers. We cover off a lot of the compliance issues. And as I said at the start of it, we're from the employer's perspective, we don't cost anything because all of the salary packaging fees are collected from employees out of additional salary deductions. But yeah, you are looking for a way to provide the program that is as administratively low cost to you, but provides a visible and beneficial program to the employees, one that delivers a good service to them, one that they actually enjoy, and that they tell their other colleagues about it and say, you should be doing this too. Our employer has, made this available to us. They're not making anything out of it. They're doing it for us. And my experience of it has been beneficial in that I've saved tax, and it's been, I've received good service in that I've enjoyed the process, and it's all been explained well to me. So for those reasons, it often makes sense to use an outsourced provider simply because of all the things I've just mentioned. The provider will help you figure out what benefits to include in that menu of benefits for your employees, and that will depend on what type of employer you are. They'll help with communicating with the employees, whether you're using an outsourced provider or not. that's a critical part of this program, is communication, making sure your employees are aware of it, because again, if they're not aware of it, you're not getting anything out of it. And then making sure that your compliance is looked after, that you're comfortable that the benefits that are being provided are benefits that your employers are entitled to, that the right documents are being collected, that an agreement is being entered into before the employee starts actually deducting amounts from their pay. As Stefanie mentioned before, it needs to be prospective, and that you're getting the benefits. Well, unless you're a rebatable employer, no salary packaging benefits should end up being a payable item on your end of year FBT return. If they're properly administered, then they're FBT free. In fact, if FBT was payable on them, it would usually ruin all of the tax savings. And so it is important to make sure that FBT side of things is looked after. And you need to, as an employer, keep an eye on that. Make sure you're checking the end of your FBT returns to make sure, FBT reports, I should say, to make sure the benefits are being provided correctly. But that's what you're looking for, a low admin benefit program that is offers a good visibility to your employees, with hopefully with a benefit partner that is helping you to actually deliver the program in the way that you want it. If you've got an existing program, it would be the same sort of review process.
Yeah, and we do see that. I mean, the EVs are only, a newer type of benefit. So that's an example of a reason why you'd want to go back, revisit the type of benefits you're offering to make sure that it is cutting edge and providing, the best benefits that are available to your employees. Thank you for that, Simon. Well, that brings us to the end of our webinar. So thank you very much for your listening on this. And a big thank you to Steph for presenting and explaining stuff so clearly, what can be quite complicated issues. And Simon, thank you for taking your time out from fishing to join us today to explain how a good package looks, because often it can be a little bit daunting for employers to take it on. So I think that really gives a good roadmap as to how to get from where they might be to a really good program in place. So thank you both for your time today. Up on the slide here, if you want to receive anything more in terms of BDO insights, whether it's about salary packaging or other tax or broader advisory types of issues, please go onto our website. There's a link there. You can subscribe and you can receive some of this information directly into your inbox. So once again, thank you very much for your attendance today, and hope you have a wonderful day. Thank you very much.